Stuff YouTube back again with another video, another gem. A lot of sauce in this video, so you guys need to stay tuned. Today the market is really volatile, but it's a part of trading. It's they say 20% trade and 80% patience. So you just gotta be patient in the market, let the market do what it has to do, and you just follow price action. But we're gonna get it. We're just gonna say consistent. Consistency is key. We out.
So, I hope you enjoyed the little intro today. I like to switch it up a little, bring in my bro from a long time. And the crisis really continues today with First Global Bank basically going down. And also, they're seeing where the Fed balance sheet is raising so much that it basically cleared up all of the quantitative tightening that we've been doing for the past year. And I only made one trade today on the QQQ with the three line strike bearish engulfing signal, and that proved to play out well. And I'll show you all of that in today's video. Let's get into it. So on the QQQ, I'll show you, and I'll bring up the platform right here. So on the QQQ, I made one trade to the downside. I That was at 14:30 London time, and you can see the three line strike strategy here, and also a bearish engulfing candle appear right here. And also I had something else called like a resistance zone, and I could see I used the indicator to bring that up as well, and I could see it had a push down of the bearish engulfing, the three line strike. You also had that resistance zone, and you had the MACD. So I basically had four confluences going for me. So I entered that one trade to the downside with my stop loss a little bit above. It didn't come back up at all, and I was able to ride it down for a $200 profit. So I'll show you where I entered and exited that trade. So after this candle closed, I entered on the next candle, which was the 14:30 candle, entered at 306.50. I'll add it right here. So 306.50. And then I closed it at 16 on the 16 candle. That's when it looked like it was starting to reverse. And I was using the MACD for that. So I saw the fading in the red on the MACD, and I entered. I actually closed the trade from that. Just decided that, okay, the market might not continue to push down after that. I got basically a 2 to 1 risk reward. So let me just exit and go. At a point in the day, I was actually up a bit more money, but that's how it goes. You're still always going to leave some on the table. So I made this trade on the QQQ, took it to the downside. I had this resistance level as where I had my stop loss. I took it right down when it hit a 2 to 1. I was aiming for more than a 2 to 1, but a 2 to 1 is good for me regardless. So that's where I entered and exited this trade. I didn't make any more trades for the day because I was on the road. But also, what I wanted to point out as well is that the First Republic Bank, so another stage in this banking crisis, is that the Fed offered a huge loan to these banks, and then First Republic is one of them that they're basically going to bail out. But it's looking like this bailout isn't enough for what they have going on. So it seems like First Republic is going to keep pushing down from what I'm seeing. And also, I would say a negative as well is that even though they're offering these loans still have the high interest rates that is available to the entire market. So these loans are very cumbersome. So if somebody's going to take on $100 billion loan and there's a 5 or 4% interest rate on it, you're paying most of the loan in interest even before you're able to pay back the loan. So the banks taking on these loans actually put on extra pressure to them. I'm not sure if people are really paying attention to that. So that's another risk. And then with the Fed assuming these loans, you can see that the Fed shows its balance sheet publicly, And after doing quantitative tightening, so they were reducing the balance sheet, not supporting the market, and basically the Fed offered a loan to the banks, and then this is where the banks took up these loans. So now the Fed has to now basically be the backstop of a lot of the banks, a lot of the assets that are due to fail in case we don't have that kind of support. I'm not sure how long this is going to last, how long it can last, because all the banks basically are coming together and trying to support the other banks, but it's looking a lot more risky than it is, because if all the banks have to come together and all the banks are probably trading the same way, then I feel like all of the banks are underwater. So if all the banks are underwater and they're going to take on more loans to be even more underwater, I think it's going to crash everything. So this is what I'm seeing. It is like a huge risk, and you can see where article from CNN. They're saying First Republic is a hot mess. The reason has a lot to do with its wealthy clientele. So what they're saying is that it's a mid-sized bank catering to wealthy clients in coastal states, and they're saying, I guess, because it's not FDIC insured, maybe. So a lot of the deposits are above the $250,000 threshold, and First Republic isn't able to fulfill what people are withdrawing. But you have a negative catalyst as well, with First Republic being pushed down. So with the stock price being pushed down, First Republic can't even sell shares to make up for what the people need to be withdrawn. So I think this is very interesting. I just wanted to get out this video for today. Hope you enjoyed. Hope you enjoyed the intro as well. I'll see you next week, and I hope the market doesn't crash and we can make some money at least from the downside. All right. I'll see you in the next video. Bye bye.